Good morning, everybody. Thanks for joining us this morning. Today, we're going to be talking about a couple of different topics. We're going to be talking about undisclosed financing terms and what that looks like during the process of a transaction and what the repercussions are. We're also going to be going over Fannie Mae and Freddie Mac's announcement of their adverse market fee for refinances, which you may or may not have been seeing on the news. And we're going to go over one of the Wainwright forms. So it's a form that is in zip forms, and it allows you to make changes to your listing, MLS changes specifically, so extensions, price changes, that type of thing. So we're going to go over that and then have some Q&A time at the end. So thank you guys for joining us, and we're going to get started on our agenda with undisclosed financing terms. So in the last month, twice I've had an agent who is the listing agent call me very frustrated that the transaction they're working on for their seller has gone sideways at the very end because of a delay in the financing. Now, in one case, it was that in order for the buyer to be able to be approved, they had final approval, but one of the conditions of the loan was that this buyer be removed from the property she owned previously with her ex-husband. So that property was under contract, it was moving to closing, the court was overseeing the divorce proceedings, and this home was part of the final stage of that. Unfortunately, no one told the listing agent or the seller that one of the conditions of the loan, of her loan, would be that she get removed from this property. So our transaction was not delayed. However, her ex-husband's refi got delayed. So he was refinancing that house and removing her from the deed, which was one of the conditions of her loan on our transaction. None of that had been disclosed. We didn't know about it until the tail end of the transaction. Unfortunately, when you're looking at our standard forms, our purchase agreement does not address that. One of the last remaining opportunities for a seller to have a termination right is that final approval date in the financing section of our purchase agreement. However, she had been given final approval. She was approved. She was ready to close. There was just one remaining condition of the loan. And unfortunately, that was a condition we didn't know about. So it ended up delayed. It did eventually close, but not before a huge amount of hassle and delaying it and causing a lot of heartburn for the seller and rescheduling movers. And the listing side, our side, felt very frustrated by that, obviously. So the reason why I'm telling you this is when you're working with a buyer, please ask them that additional question. I understand you're pre-qualified. That's wonderful. I understand you're pre-approved. Terrific. However, is there anything tricky in your financing, a condition of your loan, like any sort of refinance that you're part of, or an estate that you're part of that's going to have to finish taking place prior to you closing on this house? It just lets you give everybody a heads up and lets you get in front of that issue and not feel like at the 11th hour you're sort of popping this on on the seller and the listing agent. The other case was just this week, and that situation was that the buyer's down payment was coming from the sale of his mother's home. He was an heir. He's going to be receiving a large portion of money from the sale of that home, and that sale has gotten delayed. So we had no idea that's where his down payment money was coming from. Now it's allowed by his lender and it is legitimate. It's just now we're all having to wait, and the sellers are very frustrated. Obviously, they're also having to rearrange movers, change their moving date. They're closing on a house in Pennsylvania and trying to move there. And because we did not know his source of funds for the down payment, we weren't expecting a delay. We expected him to have the funds at closing. And he is going to have the funds at closing. It's just the closing date is not going to be the one on the contract. And you know, and we know, and I try to reinforce this to my sellers, that that closing date is on or about. There is no penalty for closing late. There is no penalty for delaying the closing. You just hope everyone is going to act right and close on time. And just getting in front of these additional undisclosed financing terms will let you have everybody's expectations in place. Had our seller and our listing agent known all along that the buyer's down payment was going to be coming from the sale of another property, I could argue it should have been made contingent upon the sale of that property because he wouldn't have had his down payment money otherwise. That's not what we did. We don't typically look at source of funds for down payments for buyers. That's not normally our question. We just assume they have it or they're going to be in breach of contract. Well, in this case, he's going to have it. However, it's going to be delayed. So if they had set those expectations up front for our seller and our listing agent and kept us updated about it all along, people might have been irritated, but they wouldn't have been furious. So anybody have any questions about that or any stories about undisclosed financing terms that they've experienced? This is the flaw in having everybody's microphones muted. Okay. Well, I guess really it's ask the question. I have been trying to sell a property in Roanoke, and we've had an offer we've been working on with another Wainwright agent as representing the buyer, and the buyer can't close for 45 days. Well, we need a 30-day close. My seller is buying another house. We're not making it contingent upon the sale of this house, but she would really like to sell her house first. That way she's not covering two mortgages. That way she can put the seller proceeds from the sale into this new house as a giant down payment and not have as big of a mortgage on this future home. So we are only looking at offers that have a 30-day closing. Well, this buyer has a 45-day closing, and I just went ahead and asked the questions. Who's her lender? Why is it 45 days? Does she have something in her financing that needs 45 days? It turns out that it's a credit union here in town, and they just are covered up, and they're just telling everybody that it's going to take 45 days for them to close a loan. Well, there are plenty of lenders in town who are still closing on a 30-day turnaround time or less. So unfortunately, we had to give the ultimatum that I'm so sorry, we can't move forward in an offer with you if you can't assure us you're going to be able to close in 30 days. Now, we know things will happen. Things can happen that might delay closing. But what happened was that credit union came back saying, we'll do our best to close in 30 days. Well, I had to say to my seller, I'm not terribly confident in that answer. First, it's a bank, which is a credit union, which typically works in business hours. Now, I'm positive that that loan officer works nights and weekends as well. But I'm not confident that they're going to get that closed in 30 days when they came back twice saying they really need a 45-day closing. What that sounds to me like is they are going to do their best, but we all know there are no penalties for closing late. But in this case, it would cause inconvenience to my seller who wants to roll those proceeds into a down payment instead of making a large principal payment after closing. So in her case, she is buying this other house without selling her house first. It is not contingent upon her selling her house first. So option A is we sell her house first and it closes on the same day, and she takes those proceeds from the sale of her current home and she puts that down as a down payment, and she has a much smaller mortgage that she's financing, a much smaller principal that she's going to mortgage over 30 years. However, she can close on her future house and then close on her current home and make a $100,000 principal payment with the proceeds, except she's still locked into those monthly payments. Those monthly payments are still going to be the same. In option A, she's going to have much smaller monthly payments, because once that's amortized over 30 years, the only way to change that monthly payment when you make a large principal payment after you've taken the mortgage is to do what's called a recast. And when they recast, essentially there's more closing costs, and they are re-amortizing that mortgage for you at the lower principal amount, which would give you a lower monthly payment. But wouldn't it be easier if we could just get her house under contract and close it? Now, we did a 60-day closing on her future home in order for us to have the best shot possible at getting her house under contract and getting it closed prior to her future home closing, just so that we could accommodate that. Knowing full well that plan B is she buys it and she has 2 mortgages for a little while. Any questions about any of that? I know I went off on a little bit of a tangent there. Okay, we're going to move right along then. So the next topic is, you may have been seeing this on the news, that Fannie Mae and Freddie Mac are assessing a new 0.5% adverse market fee for refis. What that means is, we had just gotten back into like a refi boom where everybody and their brother is refinancing their house. Now, I will go ahead and use myself as an example. Chip and I, my husband Chip and I, we bought our house 4 years ago. It was a foreclosure. We gutted it. We moved in 3 years ago. We got a brand new 30-year mortgage 4 years ago. So we are 4 years into a 30-year mortgage. We had a 4.5% interest rate, which at the time I was kicking up my heels. That's terrific. Because my first mortgage was 7.5%, and I thought that was a great deal back then. But we're at 4.5%, or 4 years into our mortgage. So the funny part of the story is that last weekend, 2 weekends ago, 2 weekends ago, Chip took a nap for about an hour. And when he got up, I was like, well, good morning. While you were asleep, I refinanced the house. And he said, how long was I asleep? And I said, well, long enough. So what happened was I called a friend of mine who's a lender, Alex Dykes at Intercoastal Mortgage. He's phenomenal. And I called him on Saturday afternoon and just said, hey, just talk to me for a minute about whether I should refi or not. Well, long story short, he locked in our rate that Monday morning. That Wednesday morning, Fannie Mae and Freddie Mac announced this 0.5% adverse market fee that's going to be added on to all refis. So by the skin of our teeth, we got in for a refi, and I did mom and dad at the same time. So what that means is, in my case, we're actually going to refinance our house, start a new mortgage. But what we're going to do for ourselves is we're going to change from a 30-year mortgage to a 15-year mortgage, because our rate was dropping from 4.5% down to 2.625. And being at 2.625, I can switch to a 15-year mortgage, and my mortgage payments are only going to go up $225 a month. So I can pay it off in 15 years, and half the time I'll save about $100,000 in interest over the life of the loan. And in this case, what I could have done is I could have dropped it to 2.625 and done another 30-year mortgage and had a much lower monthly payment. But in this case, Chip and I are still in our prime working years. We decided we just want to go ahead and try to knock it out. And yes, we still have 8-year-olds, so we will still have, young people we're paying for in 15 years, but hopefully, about the time they're getting independent, we'll hopefully be mortgage free. So, and I'm sure I can find another $225 a month and just be a little strict on myself and cut this mortgage in half. So that is what we decided to do. I was very fortunate that we got in 2 days before they made this announcement that no one saw coming. Nobody knew this was going to happen. And what it is about is Fannie Mae and Freddie Mac are monitored by the government. They're a pseudo government entity. They are trying to get out from underneath that government control. They now underwrite about half of the mortgages in the United States. And they have decided to issue this 0.5% adverse market fee it's charged to the lenders. So the lenders have to pay that fee. They have to add that. They don't have to, but they will add that onto the interest rates that they are quoting. So in other words, had I done this 3 days later, I would have had a 3.1625 credit score, interest rate. Now, would I still have probably refinanced? Maybe, but only because I was wanting to go to a 15-year mortgage, but it wouldn't have increased my monthly payment by $225. It would have been more than that. And maybe I wouldn't have been able to do that. what they're trying to do is slow down the refis, and hopefully people then sell their home instead of refi their home and boost the inventory issue that we're all having. Now, both sides, both Republicans and Democrats, have given a lot of heat about this because Americans are currently already suffering financial loss. They're currently under strained financial situations. And this is potentially something Americans were doing to try to alleviate some of that financial tension. So in my case, had I just gone simply back for another 30-year mortgage at a lower interest rate, maybe my monthly payment would have dropped $300 a month. And that would have certainly helped my family in a time of financial crisis. So the Republicans and the Democrats are arguing that this is not the time. And when I spoke to Alex this morning about it at Intercoastal Mortgage, he was on his way to vacation, by the way, but he happily answered all my questions anyway. What he was saying is this is really going to hurt the small lenders. The big lenders are going to absorb that 0.5% and maybe not even pass it on to their clients. But the little lenders are going to have to. They are not going to have the deep pockets to be able to float this for people or be able to absorb it. In my case, his company and several other companies are absorbing it for folks that they had already locked in. So if you locked in but are closing after this adverse market fee takes effect, that mortgage company is going to absorb that cost for me, which is very kind. I specifically asked him if it was going to impact the money he makes on this refi, and he assured me it did not. So, because he's commission only too, so we've got to look out for each other. We commission earners. Anybody have any questions about that? I know it's pretty thick stuff. Just know that it's only impacting refinances. It absolutely is not going into effect on purchases. So what they're trying to say is, hey, maybe instead of refinancing and putting on a master suite that you've always been wanting, go ahead and put your house on the market and look for a house that already has that. And we're just trying to get some movement back into our market with more inventory. Questions? Anybody? Y'all are a quiet group today. Okay, so next we're going to go over a resource that I have available for you. Most all of you have probably seen it and or used it. However, I'm going to make a special request that we go back to using it more often, because what we're starting to see are price changes and extensions coming in as emails that have been forwarded to us where the sellers have agreed to those items. I would much prefer this end up on a form. And then we can put the form in the file. I don't want to be printing out emails and sticking them in files. I would much rather have an actual signed form. So I'm going to share my screen for a moment and show you what the form looks like, or refresh your memory what the form looks like. So when we go here to zip forms, you will see, let me go back here. I'm going to go to view forms. And what I'm going to do, let me move this little window here, is I'm going to switch from the Roanoke Valley Association of Realtors to the Wainwright Library of Forms. And when I switch to the Wainwright Library of Forms, you will see some forms that I have loaded in here for you to be able to use. Now, we'd also love for you to use the new file form at some point. This is a form that goes at the front of your ratified contract and helps us keep all the information on one page. However, let's go over the multiple listing service change request form. This is a form that is very easy to use. You're going to put the date and the MLS number on it, the address of the property, the listing agent name, and then what's the reason for the MLS change? Is it an extension? Is it a price change? Is it a miscellaneous change? So obviously you can put in an extension date here, and that would be the new expiration date. Here you can change the list price. Miscellaneous change might be something like sellers request to have the home withdrawn from the MLS until August 23rd. Maybe they've got an illness. Maybe they've got a new baby arriving home. Maybe they are going to remodel the bathroom. Maybe they're going to have the floors refinished. There could be many reasons why a seller might want to pull their house off the market for a short period of time. And this form would give you permission to do so. And down here, we're going to reference the listing agreement date, and then everyone's going to sign it, including you. All right, I'm going to stop sharing. Well, you know what? While I've got you here, let's go ahead and take a quick look at the, let me pull it back up, at the new file form. So the new file form is something you would fill out, and you'd put this at the front of your ratified contract when you email it to the office. The only thing I'll point out is this form here, agency disclosure. That is not a form that exists anymore. Instead, that is now called the exclusive right to represent buyer form. Back when I made this form, we did not have the exclusive right to represent buyer form. We had what was called an agency disclosure form. Samantha will remember this. And so will Sharon. What that form was for was you would say whether you're working for the seller or the buyer. But then we decided to have our own form for it, the exclusive right to represent buyer form. So agency disclosure, just check that box if you have the exclusive right to represent buyer form signed with this, okay? And then this is just a form that goes on the front of your file when you email it to the office. So do us a big favor and include that if you don't mind. Okay, that concludes my agenda this morning. I finished up kind of early because it was just me chatting away. So now we're going to have some Q&A time. Who has any questions or anything they want to bring up, any experiences they've had recently that they'd like to talk about? Anybody have anything? No pressure, you don't have to. Okay. Well, I'm going to say bye to everybody. Thanks. Sorry it was so short this morning, but I appreciate your undivided attention.